If you've been told that you need 20% down to buy a home and you're thinking, cool, so I'm going to be renting forever, this is the video for you. Because most of the time, what people are really afraid of is not just the down payment. Let's be real. It's PMI. PMI? What the heck is that? Well, it's called private mortgage insurance, hence PMI. That is the extra monthly cost that people hear about and immediately assume buying with less than 20% down is clearly a scam. I'm wasting my money and I should wait until I have 20% down. So today we are going to break down and make PMI simple. What you're going to learn is what PMI actually is and also what it's not. When you have to pay it and when you don't. The real trade-off between waiting for 20% versus buying earlier. And the practical ways to reduce PMI or get rid of it faster. If PMI has been the thing in the background making you hesitate, stay with me. This is going to feel a whole lot clearer here in a minute. So let's start with the plain English definition. PMI stands for private mortgage insurance, as I stated before, hence PMI. It's an insurance policy that protects the lender, not you, in case you stop paying the mortgage. And you are usually going to pay it when you put less than 20% down on a conventional or a fair bit of government loans. And that is the key. PMI is typically connected to conventional loans, more so than even government, and down payments under 20%, okay? This is because of the increased risk. So why does it exist? Again, increased risk. Because from the lender's perspective, a smaller down payment means you have less equity, the loan is higher relative to the home's value, and again, there's more risk for them. So PMI is basically the lender saying, we'll still lend you with less than 20% down, but we do want a little bit of extra protection, just in case things get dicey. And so here is the first big mindset shift. PMI is absolutely not punishment. PMI is the cost of accessing homeownership earlier. It's like paying a fee to enter the game sooner. And the real question is not, is PMI good or bad? The real question is PMI worth it in my situation compared to waiting? You have to weigh this out because waiting does have a cost too. And let's talk for a minute about the waiting cost. When people say, I'll just wait until I have 20% down, what they often forget is while you wait, you are still paying rent. Rent could possibly increase. Home prices could also increase. You're not building any equity. You're not locking in a housing payment that could stabilize over time. So sometimes waiting to avoid PMI costs you more than PMI would have actually cost you. Not always, but sometimes. And that's why PMI needs to be evaluated as a trade-off, not as some kind of moral failure.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4693733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
So let's clear up a really common misconception. PMI means that I'm throwing money away. PMI is not equity. That is entirely true. But it may still be worth it if buying earlier helps you build equity sooner, stabilize your housing situation, stop getting hit with rent increases, and start benefiting from long-term home appreciation if that is what happens. Also, and I'm not a tax professional, PMI often is tax deductible. So you're getting a little extra benefit there too. So think of it this way. If PMI costs you, let's say, a few hundred a month, but your rent is going up every year anyway, and buying helps you start building equity sooner, PMI might be the strategic bridge and not the waste you've been feeling like it is. But again, it really depends on your numbers. So now let's get a little bit practical. When do you usually pay PMI? On a conventional loan, if your down payment is under 20%, you pay PMI monthly. And sometimes there are other structures like upfront or split options that you can look at depending on the lender. They're not as common, but we do utilize them in some cases. But here's the part that most people just don't know or understand. PMI does not have to last forever. It usually goes away once you reach enough equity in your home, and it is actually set up via the amortization table on when it should drop off. And that is what it makes it different from rent, because PMI is often temporary. Rent is forever until you stop renting. So the next question becomes, how do I get rid of PMI? And there are a few common ways, but keep in mind that not all of them are automatic. Option 1, you pay down the loan and you reach the equity threshold. Over time, as you're making the payments, your loan balance is going down. Once your loan balance is low enough relative to the home's value, PMI can drop off, and it is actually set up on your amortization schedule. So you want to take a look at when it's scheduled to fall off. Option 2, your home value rises and you reach the equity threshold sooner. If the home value increases, your equity position improves faster, which can help remove PMI earlier, sometimes through a new appraisal or a lender process. In this case, you must check with your servicer. And I'm going to give you a little tip. If you have been late on your payments at all in the last 12 months, I can pretty much guarantee you they're not going to want to remove that extra protection for them. Now, option 3, you make extra payments towards principal. Some people choose to pay a little extra each month specifically to reach PMI removal point sooner. Not everyone should do this, but it definitely is a strategy. And again, you have to go to the lender and servicer to be able to determine when they will remove it. The only guaranteed removal is when it hits the amortization schedule. Now, the key takeaway here is that PMI is often a phase. It is not some kind of life sentence. Now, I want to address a question that causes a lot of confusion. Do I always pay PMI if I put less than 20% down? And the answer is actually no, because not all loans use PMI the same way. Conventional loans typically use PMI under 20% down, but some loan types have different rules. And even within conventional loans, the PMI cost varies. It is not one universal price. So some loans that do not require PMI are VA loans, which is Veteran Affairs loans. So for people who are in the military or either active duty service or retired military or discharged military, okay? USDA technically does not have PMI. However, they have something very similar to it. It's just quite a bit less. Now, PMI in conventional loans depends on factors like credit score, down payment size, loan amount, lender and insurer pricing, which means two people could both put 10% down and have very different PMI cost. So if you're thinking PMI will definitely be insane, the truth is you won't know until you look at your specific numbers and your specific situation. This is why guessing usually creates more fear than reality. Now, let's do a simple should I buy with PMI or wait decision framework. We're going to use 3 questions. What does PMI cost me monthly? What does waiting cost me monthly? What do I gain or lose in time? So, question 1, what does PMI cost me monthly? You can get a rough estimate from a lender or a mortgage expert. Question 2, what does waiting cost me monthly? And that's often what your current rent is, plus your expected rent increases, plus the time you'll keep paying it while you save. Also include the invisible cost of if prices rise, you may need even a larger down payment to hit that 20% mark. Now, question 3, what do I gain or lose in time? Buying earlier may mean building equity sooner, having stability sooner, not getting pushed around by rent increases. Waiting may mean more cash saved, lower monthly payments later, more flexibility in the short term. So now the decision becomes which trade-off fits my life right now, not PMI is bad and I should wait forever. So let's talk about ways to reduce PMI if you do buy with less than 20% down. Strategy 1, improve your credit score before you apply. Because conventional PMI pricing is a risk-based pricing, better credit means lower PMI cost. Even small improvements can sometimes change the monthly cost there. Strategy 2, increase your down payment slightly if possible. You don't need to jump from 5 to 20% down overnight. Sometimes just moving from 5 to 10% can reduce the PMI meaningfully. Now, I will let you know that typically it is 5% buckets that's going to move the needle, not like 1%. Strategy 3, choose a home price that keeps your payment calm. People get PMI trouble when they buy at the top of their approval. Then they're paying a big mortgage plus PMI plus taxes plus homeowner's insurance. And then it all feels really, really tight. The calmer you purchase, the less PMI becomes a stress factor for you. Strategy 4, plan a PMI exit. Before you even buy, decide, once I own, I'm going to work towards removing PMI by doing X. That might be making one extra principal payment per quarter, saving for future lump sum, tracking when you might reach the equity threshold, checking appraisal options at the right time. Having a plan turns PMI from scary to temporary and manageable. Now, let's address the emotional part again, because this is where people get really stuck. Some people have this belief that if I can't do 20% down, then I'm really not ready to buy a house. But readiness isn't just about down payment number. Readiness is, does the monthly payment fit your life? Can you keep a cushion after closing? Does buying match your timeline and your stability needs? Do you understand your cost and have a plan? Someone with 10% down, a calm payment, and an emergency fund can be way more ready than somebody with 20% down who's completely drained every dollar to make the 20% down and they are stressed. So don't let this 20% down or nothing be the myth that keeps you stuck. Now, I want to give you a quick and simple action that you can take this week. Write down these 3 lines. My rent is X per month, and my calm mortgage payment range would be X or Y per month. If PMI was around X per month, would buying still feel worth it for me? And even if the PMI number is a rough estimate for now, this exercise moves you from fear to clarity, because clarity is what makes good decisions. So now, let's zoom out. PMI is not actually a trap, and it's not automatically a waste. It is absolutely a tool, and sometimes helpful, and sometimes not, depending on your numbers and your life. The goal is not to avoid PMI at all cost. The goal is to avoid becoming house poor and making a decision that you'll regret. If buying with PMI gets you into an aligned home with a calm payment and a plan to remove it over time, it can be a really smart bridge to home ownership. And if PMI would make the monthly payment picture way too tight, then that is also valuable information, and it points you towards what to improve next. So now I'd love to hear from you. What's your biggest reaction to PMI right now? Are you, I'd rather wait for 20% down? A. B. I'm open to PMI if it gets me in sooner. C. I'm not sure. I really need to look at my numbers. drop an A, B, or C in the comments and add one sentence. The reason is X. I read all those comments and I'll reply with the clearest next step based on your answer. And I'll keep making videos that break down the real cost and strategies so you can move toward home ownership without confusion. And if you want us to figure out what those numbers actually are, you can go ahead and book a call with my team at pbjteam.com.